Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. It's time for the Boeing earnings, and I'm very excited this morning because my latest trade has gone perfectly. I cannot declare it as a win yet because I haven't sold it yet, but it's looking very nice. We've got the Boeing earnings coming up in just a few minutes' time. Can I share with you? I've got to gloat just a little bit. Don't we all do that when we win? Yeah, okay. So here we go. Let me show you the S&P 500 is up 0.13 today. Very nice. Very good. Consistently making money, consistently winning. We like that. But I sold my S&P on my Roth IRA tax-free. And where has that gone this morning? Exactly like we anticipated. Look at that. Bought it right at the bottom, oversold on the announcement, and we're up 0.84. Oh my gosh, it was the best. That's probably the best trade I've ever done. Because in 3 weeks' time, 4 weeks' time, I've got $390 in dividends. And it was tax-free as well. So this is the issue we've got now, what my last live stream was about. The S&P now is going to top out in September when money goes into XRP and altcoins and Bitcoin and all this stuff like that. And defensive is going up. I bet J&J's up as well. There you go. I could have bought either. It doesn't really matter. But Coca-Cola is my favorite, only because I understand the business. But there we go. Look at that. Oh, my gosh. And what does that mean in the real world? Well, I'll show you what that actually means. Look at my Roth IRA. It's pretty crazy, right? Pretty crazy. Let me go over and show you exactly. So I bought in on Coca-Cola yesterday. At the exact moment I said this is oversold. I did it live on the show. $263 up already, 6.64. Plus, we're going to get that amazing dividend. So very happy with that. Couldn't have really gone any better. And I hope many of you took advantage of that. It was an obvious trade to me. All right, let's get back to Boeing. It's the Boeing earnings in 20 minutes' time. Let me go over to the comments and questions. Please tap the like button. Not many people are interested in earnings. They think they're boring. They think they're rubbish. Well, this is where we learn about things like Coca-Cola, when to buy, when to sell, how to buy, using tax advantages and all these things. That's why we cover the earnings. It's not that boring when you start winning all the time. So tap the like button and consider subscribing. All right. Let me just tap this. Got to show some love to that. Okay, do that. Let me read the comments. What do you make of all that? The Rooster sent me longevity, just became a member. Lots of new members on the last stream. DJ became a member. David Gatrell became a member. Stella became a member. Karen just became a member. Hey Up. Hey Martin, Chris Schultz, where you all from? Martin, you keep bragging about always winning, but the truth is, this is a massive misrepresentation of your investing history, as over the course of the past 4 years, you've underperformed the market. That is not correct, Posty 123. Absolutely ridiculous. When I started the show, it was Martyn Lucas, the day trader, and we now switched to becoming mainstream media as an investment channel. I rebalanced my portfolio. I rebranded my portfolio. I started again. I learned the lessons for the first 2 years, and since we rebranded, everything is very, very different. Anyway, lovely to have you in the show. I enjoy the videos. You do make me laugh. It is great entertainment for me, even though I'm the only person who watches them. I do enjoy them. So anyway, it's a keep bragging. Well, you know, the facts are they are what they are. Sorry about that. Here's my portfolio, another all-time high, 262,730. So I'm not making this up. There is my overall position. If I go to my overall position, we started with $5,000. We're now up to 220,000 on my main account. On my overall account, 260,000. I paid all my margin off. I've just started to use a bit of margin again at 17,997. You say it's rubbish, but that V shape there, that is the greatest V-shaped recovery in stock market history. That is a fact. Over the S&P over its entire life. Now, if you took advantage of that dip, and I did, I bought at the bottom. It's how I went from 60 grand down to 70 to 15 grand up over in a matter of weeks. Then you would be celebrating too, like I am. That was the greatest S&P recovery in history. There's never been a greater, faster dip and recovery. That's why so many people don't believe it yet. But anyway, that's up to you. If you don't want to, if you think I'm bragging, that's fine. I am bragging because I'm always winning. And I'm excited about that. And I encourage people to do the same. So to answer your question, you keep bragging. Yes, I do. About always winning. Yes, I do. But the truth is there's a massive misrepresentation of your investing history. Everybody knows when I started off, I made mistakes. It was a different channel, a different structure. I learned a lot of lessons at the beginning and now a very different story. As over the course of the past 4 years, you've underperformed the market. That isn't true at all. So at the end of the day, it's where you started and where you are today. Started with 5 grand. I've now got nearly $350,000. If that's a loss to you and that's misrepresentation, good luck. Once again, I enjoy your videos. You do make me laugh. You and your friend. There's two guys who make videos, and I absolutely love watching them, even though I'm the only one who watches them. Patience is key. Accumulate much as you can and stay out of the noise months, years down the road. Oh, by the way, the email that you sent, I don't open emails. So I know you sent an email with attachments. I never open emails from anyone, least of all you. Accumulate much as you can and stay out of the noise months, years down the road when it's going to pay off. Daily, week, don't get excited about. Chris, SRPT to share going to 50, 60 rows, 7. Load it up, says Chris. Lucas Aid here bringing you today's easy money. I love it. Does he show any live trades? Yes, I do. Last night, I sold all of my S&P 500 on my Roth IRA. We're 15 minutes away from Boeing's earnings. Last night was my best trade ever. Our postman won't like this. Last night, I sold all of my S&P 500 on my Roth IRA, tax-free. And I did it live on the show. Let me share with you on the screen. Here it is. So there is the S&P up 0.15. It's going to cool off now into September. And I bought Coca-Cola. We're going to go defensive. What did I do? There's my S&P. And I'll show you the trade as well, because I know the postman won't believe me. He doesn't believe anything. There's Coca-Cola. I'm up 0.85 today. I only bought it last night. And I've got the dividend to come as well. Still don't believe me? All right, fair enough. Let me go down here and show you. So I'll go into my Roth IRA. This is where I trade because it's tax-free. If I go into VOO, how do you do? VOO. I'll show you live on the screen. Here we go. VOO. So last night, history. I own no S&P, look, on the Roth IRA, none at all. It's all gone. Sold it last night. I told you I was going to do it, and I did. There you go. Sold $41,000, $41,376. Live on the show, July the 28th, yesterday in the live show. I then took that money. And I bought it live on the show, and I went into Coca-Cola, telling you it would be the best trade I've ever done. I even called it my best trade ever on my X account before I did it. The title of the video was my boldest trade ever in the video. I'll show you that in a second. So again, you can see I literally did it. So there you go. Got 41,000. There's the number. Look, and you can see the buy-in. There it is. Come on. There is the buy. 41 and 1. There it is. There's the full buy-in. Done live on the show. And you can see the result. Told you it would be the best trade ever. And it was. I could sell it now. I've got a profit of 267, but we don't want that. There's no need for that. We'll leave that where it is. It's doing its job. So back to Boeing. And how long have I got? I've got 14 minutes for Boeing to start. So let me now share with you what I did. I put a video out calling it my boldest ever trade. Just so you know, this is for our postman who likes making videos, which I enjoy. Coca-Cola owns over Coca-Cola or the S&P 500. Why I made the boldest move of 2025. 13 hours ago, there it is. That's how I calculated it. And there is the trade. And I posted the same information to X, claiming the same thing. So when you make your next video saying I'm not transparent, please include all this, or you'll just cut the bits out you want. Wow, sat on your sofa with your hair all a mess. All right. Does he show any of his live trades? Yes, I do. Yes, he does. Thank you very much. Does he show his portfolio ever? Yes, he does. Almost every show. Basically, what we've got we've got the postman and his mate. They don't get any views on their channel, but they like to come in, they like to make videos, and they provide me great entertainment. I'm the only one who watches, so I thank them for doing it. It's just the biggest chuckle. Me and Leah watch them in between the shows. It's hilarious, the things they say. And it's just brilliant. I love it. I encourage everyone to go and watch it. Almost every show, yes. Can always check the X channel as well. That's right. Yes. You all know blockchain. You all know blockchain backer. No idea what that means. I don't do crypto. I stick to stock, says Chris. He's late. Guessing bathroom. Sorry to hear. Okay, I'm not sure what that means. I'm here. There you go. Colty, another new member. Thank you so much indeed. Each have their own ways. I never short stocks ever. I never have. I never will. I don't do options either. Hey, Martin, you reading the comments? Yes, I'm reading the comments and enjoying them. AI confirms SAH will be moved. I wouldn't take any note of that. That doesn't make any sense. Can't verify it either. Let me go through. Tax-free dividends, nice. IRA dividends, right? That's right, on my Roth IRA. Did you get a chance in the CoreWeave? I'm not sure what the question is. Earnings are base for everything. They are indeed, Martin. I've made 50% increase on my money in 2 days. Congratulations. Gareth Soloway, if you can win 70%. Gareth Soloway just sells books. Not interested in what Gareth Soloway says at all. It's all about selling stuff. When someone's trying to sell you stuff all the time, I'm not interested. This show you can watch for free. You can choose to be a member. Our training program is for free. We do it all live, so we don't make money on live streams. You make money on videos. So we do everything we can to be the most honest, transparent channel in the world. It's why we're always going live rather than making, like our two friends this morning, silly videos that nobody watches. The stock I mentioned yesterday at a halt reopened. Congratulations. Have you heard of Good Morning Crypto? They have 240,000 followers and would have you on. ABS, well, if they come into the show, become a member, they can ask me themselves in the channel. I don't email message anyone. I don't reply to email messages. I haven't got the time. So if anybody wants to be on the show, like our live CEOs, they all contact me through the live shows. That's how they do it. Posty123 is probably one of the fight Scoonies. We all know who he is. Don't give him any time. I've given him too much time by mentioning him, but it's just funny. I can't help myself. It's the most entertaining stuff. I strongly recommend you go and watch when Mr. Posty makes his next video. It's flipping hilarious. Where's his portfolio? What do you mean, where's my portfolio? I share it on the screen all the time. Meme, he just showed it. Yeah. They don't care. They don't listen. They just want to make them. I don't know. Point. Not many channels show live trades. Yes, I show my trades. Posty, but you haven't outperformed at all. The market is up 45% over your investing horizon, so I think you'll find him right. I think you'll find I'm right. Yeah, you're definitely right, Mr. Postman. You're definitely right. I definitely will come to you for financial advice. You're absolutely the right person to talk to. Just unfortunately, nobody else agrees with you and no one watches anything you do. And there you go. Keep going. You never know. Somebody might believe you one day. Let's have a look. AI confirms. No. You're the last person to take the mick out of someone's hair. I totally agree. But the difference between me and you, Posty, is you just want to look like a scruff bag in front of the world. I've got no hair, but at least I shave it every week and I keep myself presented well. You literally go on air like you've just come out of bed and you want the world to see that. Talking nonsense. You know, why anyone would want to present themselves the way you do, I have no idea. But good luck with that. Carry on. It's obviously working for you, as nobody watches anything you do. Apart from me, I enjoy it. It makes me laugh. Martyn does have Bitcoin X. Yes, I do. Yes, I do. Nice Coca-Cola rotation. While others chase hype, this is how you build steady gains. Tommy Tinkler. Yeah, the postman wouldn't agree with you, though. He wouldn't agree. Did you get in at the start of CoreWeave? No, I didn't. Stronghold is on record saying 90% as well. Who's Stronghold? Roth IRA is for 55 plus America if you want to use the money. No, that's not true. You can start a Roth IRA whenever you like. It's for your future. You don't start it when you're 55. Right. We got 8 minutes. This is the Boeing earnings. It's just been quite entertaining going up to it with our two favourite guests. There's Boeing. We're ready to go. They're playing with the audio. Let me check it. I tell you what. No, that's going too far. I was going to say, shall I let the postman come on the show live? I'm not going to do that. He just wants to promote his channel. I might let him if he becomes a member. If you're new, make sure you stop by Friday night's music channel. We have a blast over there. Good morning, everyone. Sasa Mex. Yes, indeed. Good morning to you. If you want to use the money and not have 10% fee. Oh, I see. If you want to take the money out, well, why would you want to do that? Why would you want to long-term invest and then take the money out? That kind of defeats the object. If you're going to take the money out, just use your brokerage account. There's no point whatsoever using a Roth IRA if you're going to take the money out because you'll pay a penalty. Well, that's the point. That's why it's a long-term investment strategy. Anyway, so the S&P is going down as we expected. Coca-Cola is absolutely soaring as we expected. Oh dear. In a minute, his mate's going to tell me that you should buy Yield Max Coca-Cola. Don't just buy the real Coca-Cola, buy Yield Max Coca-Cola. That's the next thing he's going to tell me. Oh, anyway. There we go. Thank you for subscribing to the music channel. For those who want to do that, we have a concert every Friday. We have our own XRP songs. There's the music channel if you want to subscribe to that. And follow me. We have a live concert. You can join me on the stage. You can request songs, celebrate birthdays, anniversaries. We raise millions literally for charity. This is Kerrville, by the way. You know where the floods are in Texas? This was there. This was the Lions camp. Raised millions for charity for the Lions Club. That's my trophy for doing it. And we're doing it again now on the music channel. Look at this, folks. Look at this, best trade ever. Coca-Cola was massively oversold, was so ridiculous, I just couldn't believe it. I only wish I could have sold my main account, but then the whole show would change, and I don't want to do that. But it was okay just doing my Roth IRA. But there you go. How much money does that equate to now? There you go, $331. Now we've got $396 in dividends, so we're coming up to $700 to do nothing really, tax free. That's all like that. I got to admit, I'm a little bit excited about it. I didn't think it would go that well, to be honest, that quick. I knew it was a good trade, but not that good. To be fair, I didn't think it would go that quick. I thought it was going to be at least a week before it sort of popped like that, but there you go. Can we hear the XRP song real quick? Can we hear the XRP in 3, 2, 1? XRP, always believe in your flow. Do your own research and get in. Can we hear the song? XRP is 60% of my holdings. That's a very risky play. For me, it's just 4%. Posty, I have well over 90% of my money in ETFs. Rest in Alphabet, Uber, Amazon, Meta, Visa, McDonald's, and doing. Let's have a look. McDonald's, so doing all right here too. Congratulations. I'm really, really pleased for you. I hope that we can become friends again. You decided to go down the whole route of trying to discredit the show, and that's fine. Do what you want. It's fine. Because it just looks silly. But If you want to do that, that's absolutely fine. It's entertaining. It's not based upon any facts, though. I even gave you a voice. I allowed you to come on the show. I mean, you don't go live. I don't come onto your show, do I? You come onto my show, and I allowed you to, speak to the world and stuff like that. In fact, I'll tell you what. This is how open and honest we are. If you become a member, you can call in and be on the show today. Ask me any question you want. You can challenge me in any way you want. If you want to be nice, that would be great. If not, that's fine. You can be rude as well. It's up to you. It's only you being reflected to the world. But if you want to call into the show, let me know. Become a member, and I will happily let you on the show. Ask me any question you want about anything, and I'll answer anything live on the show in front of the world. Right, we got 4 minutes to go. 3 minutes to go. Yeah, Coca-Cola is running like crazy. It was an obvious trade. I hope you all took it. That'll go down in history as my best ever trade. I never thought it was going to go this quick. I got to be honest. I knew it was oversold. It was obvious, but that is ridiculous. There we go. This deal with... oh my gosh. I mean, Coca-Cola is running like a crypto coin. To put that into context, it's running like a crypto coin. That is absolutely bonkers. I never thought it would be that good. I got to be honest, I didn't think it would be that good. That's insane. Wow. That's good, isn't it? All right, Boeing. We got 2 minutes. Boeing. We got to focus on Boeing. We're here for the Boeing earnings. We're not here to get drunk on the excitement of Coca-Cola, even though it's bloody great. Right, Boeing earnings. We're going to cover it. And yeah, we got to keep looking. We got to keep looking because it just keeps running. It's running like a flipping meme coin. This is Coca-Cola, folks. Hardly moves. It's a dividend-paying stock, up 1%. Oh, buy with conviction. Go all in. That'll go down in history as my best ever trade. Oh, well, there we go. Stronghold. Why did everything just take a dump? Take the profit. No. Absolutely not. I'm not going to miss out on the $400 that I'm going to get from dividends. Absolutely not. And when the S&P sells off, Coca-Cola will go up 6-7%. It's going to $80. By the way, I mean, I never told you my target. My target is $80 by the end of the year. So we got like 15% profit. It's going to outperform the S&P. It's the best trade ever. All right, okay. So Gareth Soloway just sells books, and you only and you ask folks to become members. So no. You don't have to become a member. Here is Posty's mate. Listen, mate, you're watching for free. You're getting your voice heard. Try and get Gareth Soloway to put you on the screen and answer your question. He ain't going to do it. You're not even a member and you're getting your voice heard here. Everyone gets their voice heard here, even people that want to criticize the show. It's absolutely fine. But Gareth Soloway is all about selling stuff. What we do is you can watch for free live all day. I talk to you live. I give you my time, which is the most valuable commodity in the world. And you don't have to be a member. If you want to be a member to support the show and you want to get perks and you want to get replies to comments and you want to get my CEO interviews and you want to get analysis and you want to get earnings requests and you want to get engagement on X and promote your channels and all those other things, then you become a member. But you don't have to. You can watch the show for free. But nearly 2,000 people now don't. They want to become members. Right, here we go. Let's get ready to rock and roll. It's the earnings for Boeing. Are we starting? We're on standby. Standby. Boeing earnings imminent.
Thank you for standing by. Good day, everyone, and welcome to the Boeing Company's second quarter 2025 earnings conference call. At this time, all participants are in a listen-only mode. Please be advised that today's call is being recorded. The management discussion and slide presentation, plus the analyst question and answer session, are being broadcast live over the internet. To ask a question on today's call, please press star then 1 on your telephone. At this time, I am turning the call over to Mr. Eric Hill Vice President of Investor Relations, for opening remarks and introductions. Mr. Hill, please go ahead.
Thank you and good morning. Welcome to Boeing's quarterly earnings call. With me today are Kelly Ortberg, Boeing's President and Chief Executive Officer, and Brian West, Boeing's Executive Vice President and Chief Financial Officer. This quarter's webcast, earnings release, and presentation, which include relevant disclosures and non-GAAP reconciliations, are available on our website. Today's discussion includes forward-looking statements that are subject to risk and uncertainties, including the ones described in our SEC filings. As always, we will leave time at the end of the call for analyst questions. With that, I will turn the call over to Kelly Ortberg.
Well, thanks, Eric, and it's great to have you on board. And thanks to everyone for joining in today's call. First, I want to express our sincere condolences to the loved ones of everyone on board Air India Flight 171, as well as those affected on the ground. Our team continues to provide technical assistance to the ongoing investigation led by India's Aircraft Accident Investigation Bureau, or AAIB, and we're supporting our customers in any way we can. So now let's shift our focus to the quarter. It's clear our recovery plan is taking hold. We're making steady progress to stabilize our business, strengthen development program execution, and change our culture to set up for the future. In May, we announced our largest wide-body order ever for up to 210 commercial airplanes, which adds to the momentum from recent wins in our defense business, like the F-47. Our market demand remains strong. We're just over halfway through 2025, and I'm pleased with our progress. We're starting to see real momentum, and the nice thing is that we're seeing it across the business. At the same time, we also have to acknowledge the remaining work ahead of us on this recovery. And while we continue to manage through a dynamic environment, we're certainly encouraged with the very recent trade deals. Turning now to BCA, we're seeing the benefit of our ongoing investments to stabilize our production system as we continue to remain on track with the safety and quality plan that we established and submitted to the FAA. A few highlights are we've reduced traveled work at rollout by 50%. We've addressed employee feedback from our safety and quality stand-downs. We've employed structured on-the-job training, and we simplified more than 1,500 work instruction documents. This is critical to our performance to deliver safe and high-quality aircraft on time to our customers and steadily execute our planned production increases. With more stability in operations, we delivered 150 commercial jets in the quarter and 280 in the first half of the year. That makes it the most deliveries in the second quarter and first 6 months of a year since 2018. More importantly, almost every customer I talked to has said they're seeing higher quality airplane deliveries. On 737, you'll recall our plan was to methodically ramp up to 38 per month, stabilize at that rate, and then request an approval from the FAA for the next rate increase to 42 aircraft a month. In the quarter, we achieved a rate of 38 airplanes per month, and we're now focused on demonstrating stability at that rate. We'll continue to use key performance indicators that have been agreed to with the FAA to measure the health of the production system. Those KPIs continue to steadily progress in line with our expectations we set at the beginning of the year. We expect to be in a position to request approval from the FAA in the coming months to increase to 42 aircraft per month. On 787, we successfully completed a capstone review in the quarter, and the program is now at production rate of 7 airplanes per month. Like our team in Renton, our team in Charleston is now focused on stabilizing at the new production rate and using KPIs that we're tracking, and they still look good. They're all green. We'll continue to track those over the near term before preparing for the next rate increase. Turning now to our commercial development programs, we continue to progress with our 777X flight test program and remain focused on the work ahead to get the airplane certified and delivered to our customers. With our full test fleet activated, including 4 dedicated airplanes, the program has completed more than 1,400 flights and 4,000 flight hours. Flight testing continues with no new technical issues to report. So good progress so far, but we still have a lot of work to do. Production of the first 777X-8 freighter is underway with the first hole drilled in the wing spar this month, and work on major assemblies at Boeing and key suppliers is in progress. On 737-7 and -10, we continue to mature the technical solutions for engine anti-ice and the certification path for these 737 MAX family derivatives. Work on the solution is taking longer than expected, and we now are expecting certification in 2026. As we previously said, we don't expect a material impact to our production plans, and we're prepared to build other 737 models for our customers. Switching now to Boeing Defense and Space. As you know, we recently named Steve Parker as our permanent defense business CEO. Steve's a terrific leader and has guided the team in our recovery, helping to stabilize our defense business, improve our customer relationships, while developing his people with a focus on building a strong culture. And I look forward to his continued leadership in this turnaround. We had another good quarter on our fixed price development programs and held our EACs for the second consecutive quarter. Our renewed efforts around baseline and risk management of these programs are producing early results. Again, like in commercial, we have a lot of work to get these programs through the development phase, but I do like the direction we're headed. On MQ-25, the team began ground testing and successfully worked through the production move to our new facility, bringing the program closer to first flight for the U.S. Navy. On T-7, we finalized the MOA with the U.S. Air Force to build 4 production representative aircraft, and now have completed 5 milestones associated with the original agreement. As we've said, active management is a win-win for both us and our customers, and show us how this approach works to de-risk some of our development programs while delivering capability to our customer. On KC-46, we delivered 5 tanker aircraft in the quarter. Recent global events remind us this platform continues to deliver unparalleled capability, versatility, and operational flexibility for the warfighter, no matter where we are. As the customer gains confidence in our stability and operations, the U.S. Air Force recently shared its sole source approach for the next batch of KC-46 tankers beyond the current program of record. Turning now to our space portfolio, we recently captured an important win with the U.S. Space Force, awarding Boeing a $2.8 billion contract for the development and production of 2 satellites to deliver resilient space-based nuclear command and control and communications for the United States. This contract is consistent with our strategy to ensure we enter into the appropriate contract type for the appropriate type of work. Furthermore, this award is a testament to our role as a leader in national security space, and we stand ready to support future programs like the Golden Dome. Looking forward, the recently enacted reconciliation bill also increases national defense spending by $150 billion through fiscal year 2029, providing funding for Boeing defense programs like the F-15EX, the MQ-25, the E-7, and proprietary programs, among others. Our portfolio is well positioned to meet the priorities of our customers and the current global threat environment. Next, we'll discuss Boeing Global Services. BGS had another strong quarter, continued to deliver great performance for our company as they support our defense and commercial customers. In the quarter, we delivered the first P-8 with enhanced anti-submarine warfare technology to the U.S. Navy, marking a major milestone for our team in Jacksonville, Florida. BGS also secured a contract to provide P-8A aircraft training systems and support to the Republic of Korean Navy. And in commercial services, we opened our 3rd parts distribution center in Germany and our 9th global location dedicated to shipping spares. Our network of distribution centers enables quicker repairs as well as maintenance and overhaul work to keep airplanes in service, all focused at serving a growing aftermarket. Turning now to global trade, where the environment has been dynamic. We continue to simultaneously monitor policy developments while mitigating the potential impacts of tariffs as trade negotiations continue. As a reminder, about 80% of our commercial supply chain spending goes to U.S. suppliers, and about 80% of our commercial deliveries are to customers outside the U.S. As a leading U.S. exporter, ongoing free trade is important to our business. Our top priority is promoting continuity of supply, and we're working across the supply chain to ensure suppliers are focused on meeting the strong market demand. You'll recall that we framed the risk of higher input costs in our first quarterly call, and our team is doing well to manage within that framework. We are seeing some of these input tariffs resolved through negotiation agreements like the one announced over the weekend between the U.S. and the EU and the bilateral with the U.K. So overall, we're probably feeling better today, but we still need to actively manage through this dynamic environment. We appreciate the administration and Congress for championing U.S. aerospace industry around the world and applaud President Trump and the EU Commission President Ursula von der Leyen for reaching a negotiated agreement that will be good for the aerospace industry in the U.S. and Europe. The administration understands the role of our sector in strengthening the U.S. trade balance, and we're optimistic that future agreements will address aircraft and parts as we work through our diverse backlog of more than $600 billion for our global customers. During the past several quarters, you've heard me talk about 4 key areas that will enable our recovery. This morning, we've touched on the progress to stabilize our business, improve program execution, and build on our future with key wins. I'd like to now spend a few moments going through our progress on our culture change. You may recall earlier this year, employees helped create a new set of values and behaviors that we shared across the company. I'm very excited about how the employees have embraced this. It's simple, it's straightforward, and it's helping people rally around change. This month, we took our next step in rebuilding our culture by introducing our new performance management approach to strengthen accountability, develop careers, and measure what they accomplished and how they achieved their goals through our values and behaviors. These measures will be important because they determine how we reward, develop, and promote our people. I'm confident as we continue to change our culture, work to rebuild trust, and strengthen accountability, we'll continue to move Boeing forward. We have an incredible opportunity ahead. Now, before I conclude my prepared remarks, I'd like to give special thanks to our employees for their dedicated and hard work throughout the quarter. The energy that they're creating here and the focus on delivering to our customers, meeting commitments, and execution is really paying off. And I also want to extend my deep appreciation to Brian West for his outstanding work over the last 4 years to stabilize our business and navigate the recovery, all while continuing to position the company for our future. And I particularly want to thank him for the support he's given me this past year. As you know, we recently announced Jay Malavi will join Boeing in a couple weeks as our new CFO, as Brian transitions into a senior advisory role. I look forward to welcoming Jay to Boeing and Brian's continued counsel in his new role. Thanks, Brian. Now I'll hand it over to you to discuss the operating results before we move to questions.
Thanks, Kelly, and good morning, everyone. Let's start with the total company financial performance for the quarter. Revenue was $22.7 billion, up 35%, primarily driven by higher commercial delivery volume. The core loss per share of $1.24 was a significant improvement compared to last year, driven by higher commercial deliveries and improved operational performance across the business. Free cash flow was a usage of $200 million in the quarter, reflecting higher commercial deliveries and working capital that improved compared to both the prior year and the prior quarter. Our free cash flow was better than expectations shared in April, driven by higher commercial delivery volume and better wide-body mix, as well as favorable timing of CapEx. Turn to the next page, I'll cover BCA. BCA delivered 150 airplanes in the quarter, Revenue was $10.9 billion, and operating margin was minus 5.1%. BCA booked 455 net orders in the quarter, including 120 787 and 30 777-9 airplanes for Qatar Airways and 32 787-10 airplanes for British Airways. Backlog in the quarter ended at $522 billion, which was up more than $60 billion sequentially. This includes more than 5,900 airplanes that translate to over 7 years of production, and the 737 and the 787 are both sold firm into the next decade. Now we'll give more color on the key programs. The 737 program delivered 104 airplanes in 2Q, including 42 in June. On production, the factory steadily increased rate during the quarter, with monthly production reaching 38 per month in May, and the team remains intent on stabilizing at that level. Importantly, the operational KPIs continue to progress, and we still expect to be in a position to request approval to go above 38 per month in the coming months. Spirit continues to deliver fuselages with improved quality and flow, which sets us up well for both the production ramp and the reintegration. Closing on this transaction is expected later in the year. More broadly, on the master schedule, we continue to make adjustments as needed and manage supplier by supplier based on inventory levels. Over the past year, our buffer inventory has grown to promote stability across our production system. As production continues to stabilize and rates increase over time, we plan to deliberately return buffer inventory to more normal levels. The quarter ended with about 20 737-8s built prior to 2023, down 15 from 1Q, which are for customers in China. We now expect to complete the rework on these airplanes and shut down the shadow factory in the third quarter. On the 7 and 10, inventory levels were stable at approximately 35 airplanes. As Kelly said, we continue to mature the certification path for these programs. The engine anti-ice solution has taken us longer, and we now expect certification next year. As we said, we will build other MAX models for affected customers and don't expect an impact on our planned production rates, with the financial impact of this revised timeline reflected in the program margins this quarter. On the 787, we delivered 24 airplanes in the quarter as the program continued to demonstrate improved stability. After stabilizing at 5 per month and completing a successful capstone review in the quarter, the production rate is now at 7 per month, and the program is focused on stabilizing the production system prior to future rate increases. 2Q ended with about 15 airplanes in inventory built prior to 2023, down 5 from 1Q. The rework on these remaining airplanes is complete, and we expect to deliver about half of these units this year and the other half in 2026, in line with our customers' fleet planning requirements. Finally, on 777X, flight testing activities with the FAA continue to progress, and we remain focused on the work ahead to deliver the airplane next year. 777X inventory was up about $900 million in the quarter and will continue to grow as we move towards entry in service, as we previously shared. Moving on to the next page in BDS. BDS booked $19 billion in orders during the quarter, and the backlog grew to $74 billion. Revenue was $6.6 billion, up 10% on improved operational performance, and BDS delivered 34 aircraft and 2 satellites in the quarter. Operating margin of 1.7% was up significantly compared to last year, also reflecting the better operating performance in 2Q. The business continued to make important progress in its recovery, and the game plan to get BDS back to high single-digit margins remains a key focus. Our core business remains solid, representing approximately 60% of our revenue and performing in the mid to high single-digit margin range. The demand for these products remains very strong, supported by the global threat environment confronting our nation and allies. On the roughly 25% of the portfolio that's primarily comprised of fighter and satellite programs, operations continue to reflect the stabilizing performance trends that began in the first quarter, which drove relatively consistent sequential margins. Lastly, on our fixed price development programs that represent the remaining 15% of revenue, we continue to work to stabilize and mature these programs. This quarter's results reflect improved operational performance, and we remain focused on retiring risk and ultimately delivering these important capabilities to our customers. In the quarter, we made progress on the NQ-25 program, which started ground testing, as well as the T-7A program, which achieved 3 additional customer milestones. Overall, the defense portfolio is well positioned for the future, and we still expect the business to return to historical performance levels as we continue to stabilize production, execute on development programs, and transition to new contracts with tighter underwriting standards. Moving on to the next page in Boeing Global Services. BGS continues to perform well, delivering very strong financial results in the quarter. The business received $5 billion in orders, and the backlog ended at $22 billion. Revenue was $5.3 billion, up 8% year over year, primarily reflecting improved commercial and government volume. Operating margin was 19.9% in the quarter, up 210 basis points compared to last year on favorable performance and mix, including a one-time gain. Both our commercial and government businesses again delivered double-digit margins. In the quarter, BGS completed the sale of its maintenance, repair, and overhaul facility at Gatwick Airport and secured a contract to provide P-88 aircraft training systems support to the Republic of Korea Navy. BGS remains a terrific long-term franchise that is focused on profitable, long-term, efficient offerings, and the team continues to execute very well. Turning to the page, I'll cover cash and debt. Cash and marketable securities ended at $23 billion, primarily reflecting the debt repayment and free cash flow usage in the quarter. Debt balance ended at $53.3 billion, down $300 million in the quarter on the paydown of maturing debt, with $300 million of maturities left in the year. The company maintains access to $10 billion of revolving credit facilities, all of which remain undrawn. We remain committed to managing the balance sheet in a prudent manner with 2 main objectives. First, continue to prioritize the investment grade rating, and second, allow the factory and supply chain to stabilize. Let me provide some additional context on the macro backdrop before getting into the free cash flow outlook. We continue to closely monitor ongoing policy developments and work to promote our industry's importance to the long-term economic and trade objectives of the administration.
S&P's dropping far. Should I buy back the S&P with my Coca-Cola?
Including the recent agreement with the EU.
Way above expectations.
Given our position as a top U.S. exporter, free trade policy across commercial aerospace continues to be very important to us.
That's the S&P. I sold at the top. I bought at the bottom.
We work closely with our suppliers
free money,
to promote
tax-free
continuity of supply and pursue options to mitigate tariff cost pressures. And as we said, any financial impact is not significant. Regarding free cash flow, we expect third quarter free cash flow to be more or less in line with the second quarter usage before any impact from a potential one-time DOJ payment. That sets us up for positive free cash flow in the fourth quarter, so long as the global trade environment continues to remain favorable for the industry and our commercial delivery forecast remains intact. Broadly, the markets we serve continue to be significant, and our backlog demonstrates the strength of our product portfolio. Long term, these fundamentals underpin our confidence in managing the business with a long-term view built on safety, quality, and delivering for our customers. With that, let's open up for questions.
We will now begin the question and answer session. In the interest of time and to allow for broader participation, we ask that you limit yourself to one single part question. Our first question comes from the line of Miles Walton from Wolfe Research. Your line is open.
Thanks. Good morning. Brian, thanks for all the help the last 4 years. You've always been straightforward in assessing these ups and downs. It's good to see we're on the upside. And on that point, can you lay out for us the $2 billion better performance here on free cash flow in the second quarter? How much of that should we translate to the prior $4 to $5 billion target? Are we comfortable, say, around $3 billion or so? And then what might be upside risks for the year?
Well, thank you, Miles. That number you threw out there in terms of $3 billion, that's probably a pretty good assumption. And let me just walk you through some of the pieces. The first half free cash flow usage of $2.5 billion exceeded our expectations. And the second quarter use of $200 million was quite a bit better. And it's primarily driven by better BCA delivery performance, as well as some timing items. And let me highlight one important one on the 777 program. Usually, we see 6 to 7 777 deliveries in a given quarter. We had 13 in the second quarter, which drove an incremental $700 million of positive free cash flow. Now, as we think about the third quarter, before we adjust for a potential one-time item, free cash flow, as I mentioned, is going to look a little bit more like the 2Q usage, more or less. And here are the things that are driving it. The benefit of lower interest payments will be offset by this 777 2Q reversal that I just outlined. On volume, 737 could be a bit better, and I think the 787 is going to be pretty steady. And there's a few $100 million of unfavorable timing shift from 2Q to 3Q, mainly CapEx spend. On top of this, in the third quarter, there's a potential for a $700 million one-time payment related to the DOJ non-prosecution case. So that's the third quarter, which then sets us up for the fourth quarter to be positive. And as long as the global trade environment remains favorable and we make progress on the rate increases, we expect the fourth quarter to turn free cash flow positive and set us up to exit the year with a very nice positive momentum heading into 2026. So when I put all that together, I think your number there of $3 billion is pretty reasonable for the full year.
Thanks, Brian.
Your next question comes from the line of Sheila Kahyaoglu from Jefferies. Your line is open.
Good morning, Kelly, Brian, and Brian, congratulations on ending on a high note, and thank you. Kelly, maybe one for you on tariffs. We've seen a number of trade agreements announced since April with lower tariffs, with the tariff agreements benefiting Boeing orders potentially year to date. How do you think about the 0 for 0 with the EU? How do you think of the order momentum builds from here? And given the 7-year backlog, how does that factor into pricing and deal negotiations and any potential impact on supply chain?
Yeah, Sheila. Well, this obviously been some of these deals have been a good boost
it's
for us
going
here in the last
way more than I
quarter.
thought. Sell
let me start
Coca-Cola and buy back the S&P.
I think that's still important.
It'll be like $600 profit
recall,
now.
We
end to
outlined a less than $500 million
That's crazy.
impact
One
on
day.
the input tariffs. One of the key areas
Just
for us
doing the numbers in my
is
head.
the equipment we import from Japan. So getting this Japan agreement in place, and we understand that to include a 0 for 0, no input tariffs will be helpful for us going forward. So that was one of the big ones. We still need to see what happens with Italy. As you know, we import some fuselage components from Alenia in Italy. So hopefully that will also result in 0 for 0. My understanding is that is the kind of the baseline negotiation strategy as they go through these bilaterals, that we will end up in a 0 for 0, but still work yet to do. In terms of the demand side, yeah, I mean, everybody's looking at their trade imbalance and saying, how do I address that? And no better way than to make a big aircraft order. So the order environment is going to be very good. In terms of pricing, irrespective of the tariff-driven demand, this has been a constrained environment, and so we've been managing our pricing to also reflect that environment going forward. So I think that will also give us an opportunity, particularly to offset some of the cost growth, inflationary cost growth that we are going to see going forward. So the landscape's pretty good right now. A couple areas I just think we got to keep watching. One is making sure that we don't end up back in retaliatory tariffs with China. So we are making deliveries, as you know, right now, and hopefully that comes to a resolution. And then the USMCA program agreement is still very important because of the amount we import from Mexico and Canada. So as they revisit that USMCA, hopefully that stays in the same trade situation that we're in today, so we don't see additional tariffs that are going forward. But, look, if we continue to see this 0 for 0, I think we'll, be able to beat that $500 million bogey that we've established here.
Great. Thank you.
Your next question comes from the line of Peter Arment from Baird. Your line is open.
Yeah, thanks. Good morning, Kelly and Brian, and thanks again, Brian, for all your support over the last 4 years. Really appreciate it. Hey, Kelly, maybe we could talk a little bit about maybe the longer-term framework, how you're thinking on rates when you think about the progress you're seeing on the 737 MAX and the 787, and I guess specifically on the 787, it seems like the demand continues to be really strong with obviously the orders that you're seeing, and there's a wide body replacement cycle. It seems to be heating up. How are you thinking about where the long-term rates could go there? Thanks.
Well, first of all, Peter, one step at a time. We just moved from 5 to 7 a month very successfully. And as I said in the prepared remarks, our KPIs are green after we've done that rate increase. So we'll stabilize at that rate, and then we'll consider moving to the next rate. We have a series of rate increases in our plan, and as you know, we're investing in expansion in Charleston as well, so that we can continue to grow beyond the current capacity of our facilities there. So the market demand is strong for 787, and increasing rates is part of our plan to address that market. On the MAX, we're at the 38 a month rate, and like we said, we're stabilizing right now. I expect to be going to the FAA soon to start the negotiation or discussions on the rate increases. We do still have one KPI that is below threshold that we're still working. Not surprising. We know it's the amount of rework hours we have on the airplane, so we're working that down. And once we get that KPI where we need it, then we'll be having those discussions with the FAA. We've said rate increases beyond that will go in increments of 5, no earlier than 6 months. And that doesn't mean it's on 6 months. It's no earlier than 6 months. We'll continue to do what we're doing right now is as we go to the new rate, ensure we're stable and can prove that the production system has the right metrics before we go request an increase in rate. And if they aren't, then we'll stay at that rate until we get the stability to where we want it. But we've kind of said no earlier than 6 month increments, and they'll be in 5 per month steps.
Appreciate the call. Thanks, Kelly.
Mm-hmm.
Your next question comes from the line of David Strauss from Barclays. Your line is open.
Thanks. Good morning, Brian. Thanks for the help and best of luck. Following up there, wanted to ask about MAX delivery guidance for this year and 787 as well. I think previously, Brian, you talked about 400 deliveries. It looks like you're on the MAX. Looks like you're tracking ahead of that, maybe in the 425 plus range. And is 787 still looking around 80? And then if you could just also, Brian, quickly touch on the movement in inventory in the quarter, given that you absorbed a pretty big hit on the 777X, but the inventory balance came down. Thanks.
Yeah, on the inventory one, we did have an up as expected in the 777X, but we also liquidated a lot of wide bodies, as I mentioned. So all that kind of was in the right net trajectory for inventory. And that 777X, we still expect that as we move towards EIS, that is going to go up as we expected. So don't get too concerned about that movement as we move into the back half of the year. In terms of deliveries, so on 787, we've delivered 37 airplanes in the first half, and we're focused on stabilizing at 7 per month. And we had always thought the range was 70 to 80 for the year. So we're at the high end of that range. And on the 737, as you mentioned, we circled around 400. We've delivered 209 airplanes in the first half, including 37 out of inventory. And as we continue to have good performance, we're poised to do a little better than the 400 for the full year, as you mentioned. So we feel like we're in pretty good shape heading into the second half.
Thank you.
Your next question comes from the line of Ron Epstein from Bank of America. Your line is open.
Hey, good morning, guys. So maybe, Kelly, if you could dig down a little bit more on the engine anti-icing issue with the Dash 7 and Dash 10. What's going on there? Yeah, you mentioned in some your remarks and on CNBC before that it's taking longer. What about it is taking longer, and how should we think about that?
Yeah, so we've got several different design paths that we've been going down for solutions on to correct the problem. The latest delay is driven by we just haven't closed the design. We went through some testing, and this is a very delicate area that we're dealing with around the inlet of the engines, and can it cause any perturbation to the airflow into the engines? And we found some issues with the design implementation we had, so we're going to have to back up and make some additional design changes to get through that de-icing requirement. So it's basically the engineering designs have not yielded in the time frame that we were anticipating, and so we still have work to do.
Got it. Thank you.
Your next question comes from a line of Doug Harned from Bernstein. Your line is open.
Good morning. Thank you. And Brian, thank you for all the help over the years, and good luck. On the rate increases that you were talking about before, you've had this goal in the future rate increases to 47 to 52 on the max of 6-month intervals, and I appreciate that. You'll see how that goes and make a call if it needs to be longer. But that seems like a very ambitious target, given Boeing hasn't really done that in the past. It's been more 9 to 12 month type intervals. What has given you the confidence that you can move to those levels potentially? And where do you see the biggest bottlenecks in getting there? And I'd say including the supply chain. And I'll just throw in, how are you thinking of using the fourth line in Everett in conjunction with this?
Yeah, so let me start with the fourth line in Everett. So predominantly that will be focused at the Dash 10 variant. The Dash 10 variant has the most change from all the other variants, so it will naturally flow through the factory at a slower pace. So by isolating or providing that fourth line in Everett, it will allow us to let the 3 lines in Renton flow faster. So that is a big change from what we've done in the past, having that many lines flowing. So that's one of the areas that gives us additional confidence. We've invested in the capacity. Another thing from a supply chain, remember, we've got, as Brian outlined, we've got a tremendous amount of inventory in place. So I think in the near term, as we ramp the MAX up, supply chain is not going to be a challenge for us because of the inventory levels. As we get to those higher rates that you talk about, yes, we'll be getting more to a balanced inventory level, and ensuring that the supply chain can achieve those rates is work yet for us to do with the supply chain. Now, keep in mind, we generally have them at a higher rate than we are at. And so we'll be able to see where those supply chain constraints are in advance. And, we go work them and beat them down. This is one of these processes where the constraints tomorrow get resolved, and then there's new constraints, and you just constantly are working each one of those down because we're in a perpetual rate increase kind of environment. So we've got a huge market demand, and we need to satisfy that demand. And the only way we're going to do that is through these methodical rate increases. But I will say we're going to do the same thing we've done here as we've gotten to 38 a month. The priority is to keep it stable, build high quality airplanes, and if we start to wobble, then we're gonna stay at that rate until we get the production process stable.
Okay, thank you.
Your next question comes from the line of Seth Seifman from JP Morgan. Your line is open.
Okay, thanks very much. Good morning, everyone. And Brian, thanks for everything, but best of luck. Maybe since it's your last call, we could do an accounting question. And if you could talk a little bit about the progression in BCA margins from here, both as the different programs ramp up, and also I think you mentioned maybe some margin consequences of the change in certification timing for the 7 and 10.
Yeah, let me hit that last one. So any kind of adjustments are really modest given the size of the program. So you're not really going to see, and I wouldn't have you worry about that. I would say overall, BCA margins are expected to be negative for the year, as we've said before, although less so as we go quarter by quarter. So if you remember, first quarter was negative 6.6. Second quarter, we just posted negative 5.1, and we expect to get better as we move into the second half for each quarter, but still negative. And if you step back, BCA margins will be better in 2026, but it's way too early to characterize that any further. And then, as Kelly and I have both said consistently, that long term, there's nothing that we see that would suggest that we can't get back to historical margin levels performance. So we just got to keep working the recovery plan, get back to these rates, get the productivity, and then this should be something that is in much better shape as we move forward.
Great. Thank you very much.
Your next question comes from a line of Ken Herbert from RBC
Iberian
Capital
Wolf. Yeah,
Markets.
I'm looking at my
Your line is
Coca-Cola. That was way ahead of expectations.
Yeah,
I'm
hi, good
thinking
morning,
of
Kelly and Brian. I wanted
selling
to maybe
Coca-Cola and
pivot
buying
over
back
to
S&P
BDS
now.
if we could. You've got some good momentum in that business.
This is
good budget
beyond
backdrop,
expectations.
Some leadership now on a permanent basis there.
What are you doing?
You're obviously facing some work stoppage issue or strike risk, but how do we think about that with the opportunity and the pace of margin improvement in BDS as you seem to have turned a corner from a risk standpoint? But when do we think about that business getting back to the mid to high single digits, and what's the pace in the second half of the year?
Yeah, let me address the strike question first. So, just to put in context, it's about 3,200 employees. They build the fighters, mechanics. They build the fighters and our munitions business in St. Louis and St. Charles. So, the order of magnitude of this is much, much less than what we saw last fall. That was roughly 30,000 machinists. So we'll manage through this. I wouldn't worry too much about the implications of the strike. We'll manage our way through that. Look, we've said that, and Brian said it in his prepared remarks, we want to get our BDS business back to high single digit margin. See nothing that's going to keep us from doing that. Couple points is as we're entering into these new contracts, we're following our process to make sure that we only enter into the appropriate contracting type. So these recent big wins we have, the development parts of those programs have all been cost plus. So we're not making the errors of the past in signing up for fixed price development, high risk programs. So, we do have this pig in the python that we've just got to push through relative to these big development programs. But Parker's doing a great job in working with his customers to de-risk those programs and help us get those through the development phase. So we're just going to have to keep doing that. This active management that we started with the T7 is a great example of how
a trade
we can
that is
change the outcome of this that's beneficial to both us and the customer. And, we're playing that playbook in other areas as well.
Great. Thank you.
Your next question comes from the line of Noah Poponak from Goldman Sachs. Your line is open.
Hey, good morning, everyone. And let me add my thanks, Brian, for the work with us over the recent years.
Thank you.
Clarification on the free cash discussion for this year. If 3Q looks like 2Q, and then I put the $700 million on top of that, 4Q would have to be kind of barely positive to be -3 for the year. And given the historical seasonality there, I'd think that would maybe be a little better if I'm missing something there. And then beyond 25, The consensus is around the $10 billion framework you used to have in 2027 and 2028. And I just wanted to ask, without putting a year on it, is with the demand you have and the profitability and working capital picture you see, is the 10 still the right framework?
Best trade ever.
And,
if
and
I do
it's just
it
a matter
now,
of time, or is that kind of number
that's
very far in the
crazy
future?
good.
So let me have Kelly respond to the last part. Let me take the first part in terms of your question this year. We have a global trade environment.
Let me know in the chat what you think.
Get more favorable each day that goes by. We've got some nice rate increases that we're anxious to get to stable as we head into the second half. So, fourth quarter, it'll be positive. How positive is going to be a function of how our delivery performance or rate performance goes. And a lot of that is uncertain because we've got to do things like get above the 38. So I would just, be a little, give us a little bit of time. It'll be positive. I think the $3 billion net is the right, reasonable assumption right now. And as we move through the rest of the year, we'll have plenty of time to update you on progress. And Kelly, maybe take the other part.
Yeah, no, look, I see nothing structural that says we can't get to that $10 billion. So I think you framed it perfectly. It's not if, but when. And I'm not ready yet to say when. We got a lot of work to do here as we've talked through all the production rates and see how we're doing in these rate increases. How long does it take us between rate increases? How's the supply chain doing? But I think that's certainly a target out there that still looks reasonable to me. I don't see anything that knocks us off that. We'll just have to look real long and hard at when are we going to get to that level.
We are really moving.
Thank you.
Your next question comes from the line of Scott Deuschle from Deutsche Bank. Your line is open.
Hey, good morning, Kelly. It seems that Airbus will be making some architecture decisions on its next generation single aisle within the next few years. I think potentially selecting the engine architecture by around 2027. So in that context, do you have a sense for when BCA will need to begin making these types of design decisions in order to have a competitive entry into service date for its own next generation single aisle?
Yeah, we're working through that. I'm not in a position where I want to announce any decision dates at this particular time. I've said this in the past. We've got three work streams here that we've got to mature. One is the readiness of the market for the new airplane, and that needs more work. I don't think the market is ready yet for a new airplane. When are we ready? And this whole discussion around turning the company around and generating cash flow is really important to when we're ready to launch it, as well as when is the technology ready. And engine technology is a part of it, but it's beyond just engine technology. So we're maturing all of those, and we'll do that when those three work streams all kind of converge. That's not today and probably not tomorrow.
Hey, Rob, we have time for one more question.
Certainly. Your final question comes from the line of Kristine Liwag from Morgan Stanley. Your line is open.
Great. Thanks, everyone. Brian, echoing everyone's thanks. Thank you for all your help. Kelly, congrats on your first full year at Boeing. It's great to see stability in aircraft production. I guess looking back, what surprised you most in your year one at Boeing, and where do your priorities lie for 2026?
Well, thanks, Christine. First of all, it's not a year yet. It's August 8th when it's a year, so I still have some work to do. But, I'm pretty pleased with where we are through the first half and through my first year. Clearly, the surprises have been, just a lot of the macro dynamics that we've been through. I mean, we've been through quite a bit. I'm not surprised with the performance of the company and the recovery. We've got great people in the company. We've got great market positions. My role here is just to help everybody get organized and headed in the right direction. It's turning a big ship around. I think that we're turning it. I don't think it's turned. We still have a lot of work to do. But I haven't been overly surprised with what I learned. As you know, I spent a lot of my career working very closely with Boeing. So not a lot of surprises with what we're dealing with. It's it's just one day at a time, improve our performance, address the issues that we have, restore trust and build confidence with our customer base and our end users of our products. And I think you're seeing that. So like I said, I feel pretty good with the first half, but we've got a lot of work yet to do in the second half.
Great. Thank you.
And that completes the Boeing Company's second quarter 2025 earnings conference call. Thank you for joining.
Thank you very much indeed. There we go. Right. Okay, we're back over to this now. I hope you enjoyed the Boeing earnings. We've got a live trade here happening on Coca-Cola. It's rallied. It's my best ever trade of all time. So I bought yesterday. I sold all my S&P on my Roth IRA yesterday, and I bought Coca-Cola at the very bottom, and I sold at the very top of the S&P 500. I bought all in $41,000. I'm currently up about $650 overall if I sell now and buy the S&P back at this current rate. And I like that. That's way ahead of expectation. I knew it was a good trade, but not that good. The S&P, it's now actually $650 now. $650 because the S&P is dropping crazy and the Coca-Cola is still running. So I like this. That's way beyond what I expected. Initial stop loss would be continue. I'm watching this now. 3 p.m. setting time, number of shares. How many shares? 606. So what I'm doing is I am setting a stop trail order. This is just too good to not sell. The S&P is falling like off a cliff, and so I can win twice. Bloody hell, look at that. Look at that. Let me show you what I'm going to do. So there's Coca-Cola. There's the S&P. I want to buy back. The S&P is going, it's like the perfect trade. It's the perfect trade. So I'm going to record this. Here we go. Here is my best ever trade live on the show. Yesterday, I sold all of my Roth IRA S&P 500, all of it, to buy at the very top, to buy Coca-Cola at the bottom. Went all in with conviction. It's all about buying with conviction. This has exploded way more than I thought. It's behaving like a meme coin right now. Coca-Cola doesn't perform like this, but it is. I was planning on keeping it till September, but this is going way too quickly. Coca-Cola is going up like crazy and the S&P 500 is going down. So this would be my best ever trade of all time. Currently, it's about $700 profit, tax-free, doing absolutely nothing. It's beyond my expectation. So what I'm doing is I'm setting a stop trail order on Coca-Cola at 5 cents down, just a little tiny nibble. So all my shares, it's 606 shares, which I've got, 606 at 5 cents down. Review, I'm clicking review in my Roth IRA, estimated credit of 41,874. All right, let's swipe it up. Let's swipe it up. Okay. The order is placed. The order is placed. You are watching it now, so it will now sell at, oh my gosh, this is nuts. It will now sell at 69.10. It's going. As soon as it drops 5 cents, it will sell all of my position. At 69.10, you've got to allow 1, maybe 2 cents for the market makers. Here we go. 1 more cent it could go. 1 more cent it could go, and I'll buy right back the S&P 500. This might not last very long. We're right on it now. It could sell now. It could sell now. The market makers need something. It's just trimming off. Is it gone? We're waiting to buy back the S&P. So here is my, there. It's bound to sell now. It's bound to sell. If it hasn't sold now, it'll be a miracle. Coca-Cola, the S&P is falling. I'm about to buy that back. I would imagine I've sold. No, it hasn't. It's right on the button. It's now going to sell at 11. It's gained 1 cent, 69.11. We're now selling at 69.11. It's going up again. I want this to sell now. And then I can buy back the S&P as it's falling. This is my best ever trade. Wow, 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 wow. At 69.11. We're going to keep our eye on it. Coca-Cola. 69.11. That's where it will go. Then the market maker needs some money. There's Coca-Cola. There's the S&P still falling. This is going to profit me about $7.50. If it carries on like this, if it keeps going down and up at the same time, you'll be getting $1,000 tax free for doing absolutely nothing. This will be my all-time best ever trade. This will be a day trade. Bring on the day trader. Ain't done that for a while. Wow, this is exciting. This is exciting. Back to Coca-Cola. It's just trimming. Is it going to go? This is hot as you like. If you like this, this is real day trading in real time. Tap the like button. I want it to sell. I really do, because I want to buy the S&P, but I can't really lose, can I? Click, subscribe, and ring the bell if you like day trading. This is happening live. Very exciting. Coca-Cola is running. It's going up again. The S&P is still falling. This is, if you like day trading, you're going to love this. Show some love in the chat. Show some love in the chat. How many people are watching this? This is really, really exciting. This is really, really exciting. Going to make great. Oh, 69.21. Oh my gosh. 22, 23. Flipping heck. This is coming up to $1,000 now. $1,000 day trade, and the S&P is still falling. This can't be better. This can't be better. Keep going. Keep going. Just keep on going. I can sit here all day long. Get the champagne out. 69.22. The price target of this is 77 to $80. So I'm happy with this. Not trying to beat the market. Not trying to time the top. This is absolutely great. I've got no problem with this. This is my best ever trade. Whatever happens now, it's 69.19. It's jumped to 24. 69.24. Sorry, 69.19 now is my sell price. 69.19 is my sell price. It just keeps on running. Oh my gosh. Absolutely. This is so great to be able to do this live for you. Very rarely you get a chance to see this. The S&P is falling. Come on. Come on, come on, come on. Come on, come on, come on. This is great. Yeah, this calls for the Phoenix. It does call for the Phoenix. You're absolutely right. The greatest trade of all, greatest trade of all time.
The year is 1991.
Coca-Cola is running 69.26. Come on. 69.27. Keeps on running. We're set. We can't set the buyback yet, of course. That's impossible, but that doesn't matter. Coca-Cola is falling. Keep on going. Coca-Cola is sold. Coca-Cola is sold. It's out. We're out of here. Okay, let's back over to the S&P 500. Are we out? Are we out? Are we out? Yes, we are out. We're buying back the S&P. Voo, voo, how do you do? Voo, 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 how do you do? Voo, how do you do? $50 review, 50 shares, yeah, buy, done. How much? Oh, we're moving fast. Cancel, 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 buy, 20. Review. S&P is just coming off the bottom. Buy. Trade. Buy. How much is left? 1,068.80. 1,006. Sorry, let me say that again. 1,068.80 in dollars. 1,068. 1,068.80. 1,068.80. Starting to move. This 1,068 away. Oh. Dollars. 1,068.8. Still going. Hold that. Done. We should all be in. Coca-Cola. Buying power, done. Roth IRA, done. Here it is. Woo! Here we go. So we've sold all our Coca-Cola. We did it. We sold the S&P at the top. We bought Coca-Cola at the bottom on a day trade. We then sold Coca-Cola when it was running up on a stop trail order, and we got a 5 cent off that. This could be the top. Doesn't matter to me. Don't really care. So what have we done? We've sold it. We're out. We're back in the S&P. We bought the S&P on the fall. And there it is. $642.74 is what I've done today. Now, it's more than that because that's what I've gained today. But I've also gained about $100 on the way down of the S&P in a discount. So $650, $750. That's a $750 trade. That's my best ever day trade ever. Get in. I love it. And now the S&P is going up. Coca-Cola is trimming off. There you go. So there is now my Roth IRA on the week. Look at that. It's outperformed the S&P again. The 1 month is up. You can see that big spike there at the end. There's a 3-month spike. There's the year-to-date spike. There's the year. There's the all. And there it is. $42,028. $11,528. 37.8. It's an outperform of the S&P. It's my best trade ever. I hope you enjoyed it. The S&P is now going up. Coca-Cola is now trimming. That is how to do a day trade. Tap the like button, consider subscribing, and I hope you enjoyed that. It's time to end this stream and go and have a lie down. Click above my head for all the links down below in the description. Over here and over here. Over here, I'll put you our giveaway. We're giving away $1,000 live on the show. And down here, the FOMC report. Down there, that's live tomorrow. There you go. You just witnessed the best trade ever. I love it. Perfect. That's how you use stop trail orders, and that's how you do a day trade. Until next time, as always, take care of yourselves and each other.